This year, what kind of narratives are we seeing in the market and what kind of trends are you picking up from the CoinMarketCap data?
So definitely, as you mentioned, we've seen a big shift in the market this year, RWA being one of the most prominent ones.
Is this the start of altcoin season, or is this just going to be a rotation back into big BTC?
Yes, it could happen, but alt season doesn't need Ether.
So we have seen huge headlines of funds and corporations buying into ETH and Bitcoin. How strong is the institutional appetite?
I would say we have made some history.
Hello and welcome back to the Binance Studios. My name is Jessica and joining me I have the one and only Alice Liu, Head of Research at CoinMarketCap. Alice, first of all, thank you for coming in today. How are you doing?
I'm doing well. Thanks for having me back.
Always a pleasure. And for anyone that is just joining and has not heard of content before, me and Alice will be diving into some of the research trends that we see on CoinMarketCap and Binance alike, and also looking at where we are in the crypto narrative in 2025 and what we can expect moving forward. So jumping straight in, because we have a lot of topics to unpack today. Looking at narratives of this year, if we compare this year, 2025 to 2024, last year kind of dominated with Bitcoin ETFs, we saw Ethereum staking, the rise of layer twos. This year, what kind of narratives are we seeing in the market and what kind of trends are you picking up from the CoinMarketCap data?
So definitely, as you mentioned, we've seen a big shift in the market this year. A few main topics rise, for example, RWA being one of the most prominent ones. And if you look on CoinMarketCap.com and you see the altcoin season index, you will see then the top 20 projects based on the performance, based on community sentiment for the past 90 days. And when I'm checking out that data, what projects are leading the pack? Right now, as we speak, it is three major categories. Number one, it is your centralized exchanges. So for the past few weeks, we're seeing BNB creating an all-time high, OKX creating some news over there, and also a few other crypto exchanges like Crypto.com doing really well as well. Number two category we're seeing is DeFi making a comeback. So it is your Chainlink, it is your Uniswap, it is your Ethereum, etc. So we're seeing DeFi as a whole making a great comeback again. And number three, it is your community-led, community-driven projects, things like Pudgy Penguin, things like things like a lot of the meme and bigly supported meme coin projects are also having very big trend in the market at the moment.
Okay, interesting. And I think it's really great to see DeFi is making a comeback, and we will touch on Chainlink and its rise in a little bit later on in the segment. But one of the other topics that I would love to focus on is the ongoing narrative of RWAs, which is real world assets, and tokenization of real world assets, because that has obviously been a huge buzzword as well. So from CoinMarketCap's lens, are there any things that you're being able to pick up from user trading behavior when it comes to RWAs specifically?
Yeah, it is a very good question because we really started the discussion saying tokenized stocks. Like all this debate about tokenizing some of the most trending tech stocks onto crypto exchanges. So that kickstarted. But when we are looking at the data on CoinMarketCap, we have to say that majority of the RWA snapshots activity are still concentrated around private credit and US Treasury. So on CoinMarketCap, you will see the real world asset tab. And in there, you can see the breakdown. Together, 88% of all the market caps, TVLs in RWA are from those categories: private debt, US Treasuries, digital gold, etc. And the liquidity cluster around a handful of names in there as well. For example, onto and also a few other projects released with the RWA products. And that's the number one trend, right? Still very much concentration. Number two trend we're seeing is primary over secondary. What I mean by that is very strong primary mint/redemption activities, and the holders over 52,000 holders in that category, whereas the secondary trading seems to be still improving, but still a bit shallow compared with the liquidity side activity we're seeing in the primary market. And for me, the main takeaway is that for now, RWAs, they are still purchased like funds and parked for yield. So it's still the very beginning of the RWA sector where, some of the institutions, some of the investors, they are interested, but they are not actively using it as a tool to its full potential. So what we can see here is, for example, the centralized exchange introduced tokenized stocks that we saw, but then later on criticized for the lack of liquidity in that area. We need to wait for the market to come back, wait for the activities to come back to that area.
And I think it's interesting as well, because you've mentioned with people looking for stable yield as maybe one of the larger use cases for RWA at the moment. And we are seeing the RWA trade volume is growing the fastest on DeFi protocols, which also signals that it's not just institutions, but it's also retail users and traders that are really optimizing this too. But yeah, absolutely so much room to run when it comes to bridging kind of Web3 and Wall Street. So that'll definitely be one to watch. Now let's look at altcoin momentum, because you've mentioned a few of the kind of key topics and coins that we'll be focusing on here. I think the first one to focus on, and based on some of our audience members that have kind of suggested that we cover this, is Chainlink and the Oracle RWA narrative. So we saw Bean Crypto this week highlighted that Chainlink has broke through $24, and Google searches are at a 4-year high for Chainlink. So do you think this is also tied to the RWA narrative that we did see?
Yeah, so first of all, congratulations, I guess, because Chainlink has been one of those projects that have been here for a long time, through a lot of market cycles and still stayed relevant. So to your question, whether that is driven by RWA, partially, you're right, because Oracle is one of the fundamental needs when it comes to this. But if you look at some of the recent developments that Chainlink had, I think those has been the main driver for what we are seeing in the past week or so. So what are those recent updates? Number one is the record wallet growth that we saw. For example, today, first of all, like the price, $26 is pretty nice for Link. It hasn't hit that level for a long time. So Chainlink really hit a 7-month high of that price. And that is driven by 9,625 new wallets created in 24 hours. That's the highest since January 2025. Yeah. So we're seeing a huge, massive activity on the network itself and user activities. The key catalysts include Chainlink Reserve smart contracts that have been absorbing 100,000 plus tokens, and partnerships with ICE, DTCC, and Swift. So those have really been pushed by the Genius Act in July this year. And what this really means is that it's bullish for Link because it's really sustained the wallet growth signals and institutional and retail confidence in that area. Now, the second thing that I mentioned is the partnership. ICE has been a very important one here. In this case, Chainlink integrated, ICE stands for International Intercontinental Exchanges, real-time FX and precious metal data into the data streams. So making it the largest TradFi collaboration since 2024. Swift partnership. So we can see that Chainlink is growing into TradFi and actually establishing some real use cases, tapping directly into the TradFi ecosystem. So that has been a main driver as well. Those things together with RWA being the main driver for Chainlink.
Yeah, absolutely. Congrats to the Link Marines that are watching, because I think as well, Chainlink has been such a kind of fundamental framework for the tokenization RWA on-chain based on the trusted data that it does have during the RWA breakout. And I quite like the resemblance to almost affirming it as the pick and shovels play, whereas like similar to in the gold rush, if you're looking to kind of, rather than betting on gold, bet on the utility of the pick and shovels. No matter where the asset goes, everyone needs reliable data feeds. So definitely interesting one to watch in the next few months. Okay, so now if we move on to Ethereum, because Ethereum had an absolutely stellar week last week. It was $100 off of the all-time high from 2021. And interestingly, we saw ETH balances on exchanges hit a 9-year low, and whales accumulating kind of $800 million in Ether. We saw record-breaking ETH inflows into the spot Ethereum ETFs. What does it tell us, and what does this signal about the kind of the ETH supply and the ETH narrative bouncing back?
I have to say that was a moment the whole community was waiting for. Be like, finally, a comeback of Ethereum. Remember February Bybit Ether hack and how terrible it was. But there are 3 things I wanted to say about Ethereum. Number one is it definitely, what the momentum is being showing us for the past 2 weeks, signaled it's still the number 2 position in crypto is very significant. Ethereum has a very special character. It's less liquid on the secondary market than you thought it would. 42% of Ether is actually locked away in DeFi TVL. So they were either locked in DeFi, being staked, etc. So when we have huge influx of capital coming from Wall Street into ETFs, trying to buy Ether on the secondary market, it's going to have a very big impact on the price, hence the momentum that we saw. That said, for example, yesterday, BTC dominance dropped below 60% for the first time in 90 days, and Ethereum dominance keep on climbing, reached as high as 13.3%. So we are definitely seeing the trend here of Ethereum coming up high. And when I'm looking at, there's a very good indicator that Glassnode has, which is the net unrealized profit / losses. On here, it's a colored line, almost similar to your Ethereum's fair and great index, if you like. And right now, we're finally coming back to the green zone, which is, like a belief zone coming into the greedy part of Ethereum price levels. So that signals the investors are in a very optimistic phase. But the second point I want to make is, as you said, are we hitting close to the top? Does Ethereum still have the magic it did for the past cycle? Why? Because right now, Ethereum is a lot of the activities building on L2s that we saw for the past few years definitely took some shine away from Ethereum net, right? And also the competitions as well. Yes, RWA is very important, but not all of that is happening on Ethereum. They have a lot of challenges, competitions from private networks, from L2s, etc. So two faults. When it comes to Wall Street, they still have, apart from BTC, only Ethereum to invest via spot ETFs. That is potentially going to change in October this year when Solana, XRP have their final deadlines from the SEC for the ETF approval. So for when it comes to Wall Street, when they hear about crypto and when they want to invest in blockchain, Ethereum is still considered as digital oil. So that's still very appealing. Again, potentially attracting a huge influx of capital, hence having a lot more uproom for the price. However, I think native crypto community, people have been really eyeing on Ethereum Foundation for a bit of change. And what we've seen for the past few months with the leadership change, with the new direction, etc., Ethereum as an ecosystem do have to find their edge again.
Yeah, it'll be really interesting to see, especially because I was listening to a CoinBureau live stream a few days ago and they referenced that for so many months, the Bitcoin Ethereum chart was just quite underwhelming from the Ethereum side. And now if you look at the ETH Sol chart, Sol seems to be the underperformer. So depending on those spot Solana ETF deadlines in October you've mentioned, if that could shake things up a little bit, we'll have to see.
Yeah. And another thing is October, remember guys, it's normally October for us. So potentially we can have quite a good run in October.
Favorite month in crypto.
Yes.
Historically green month. Now let's move on to the Bitcoin Ethereum rotation, because I think it follows quite nicely on from looking at the Ethereum week that it had last year. So we have had a few analysts, crypto native, Samson Mao, for example, have said he does predict that ETH holders might just rotate back into Bitcoin, which could slightly shake up what we'd conventionally see as this being the start of an altcoin season. And rotation, obviously, as we know, is just such a pivotal part of crypto's heartbeat and capital flows. What is your outlook when it comes to, is this the start of altcoin season, or is this just going to be a rotation back into big BTC?
Yeah. So I want to do two layers of analysis here. Number one is whether the rotation is going to happen from Ethereum back to BTC. Number two is if that rotation is going to have any impact or not. All right, so rotation first. I kind of agree with Samson that potentially for the crypto native community, there might be a bit of rotation from ETH back to BTC. Now, coming back to the point that I was making about, net unrealized profit / losses indicator, on-chain indicator, a lot of the wallets are now holding Ether in profit. So rotating out of that, taking some profit makes sense. That's the crypto native community. But at the same time, when I bring up the chart, the crypto treasury play that we're seeing on Wall Street, Bitmain, the immersion tech, they are still the number one top holder of Ether in that category. So right now they are holding close to 1.5 million Ether. So that is worth roughly total. Their market cap right now is 952 billion for the Bitmain immersion tech, and they have been buying recently in quite sizable chunks, right? So until that part stops, I would say that rotation is unlikely to happen because all the whales, like the believers, it seems to be still accumulating in that case. So that's the number one question, whether the rotation is going to happen or not. Yes, it could happen, but not likely for the whales, right? Number two, then would that rotation have much impact on Ethereum's price? Would that have an impact on altcoin season? I have a very bold statement here, which is Ether needs an alt season, but alt season doesn't need Ether. So we can have an alt season without Ethereum necessarily having to lead the pump here. And what I mean by that is, yes, coming back to this point, there might be some crypto native rotation from Ether back to BTC. But remember, the Wall Street is coming in strong for Ethereum, for potentially Solana, for potentially, XRP, etc., or BNB even included. So I believe the inflows is going to offset the outflows anyway. So the rotation might happen, but it wouldn't have much of a negative drag on the price there.
Okay, interesting. That's a very good point. And it's great that you've mentioned Bitmine there and some of the other different kind of crypto and ETH holdings, because Tom Lee, who is the chairman of Bitmine, is also very kind of avidly and bullishly tweeting about Ethereum and that we are nowhere near the market top. So I'll drop some of those tweets in for you guys to have a little look as well. So if we look at kind of market peaks and market cycles, so as you mentioned, altcoin season doesn't necessarily need Ethereum, but Ethereum that avidly needs a altcoin season. We are getting mixed interpretations of where we are in the market cycle and what could happen next. And some analysts are saying that the 4-year cycle is now traditionally over because the ETFs are here. And if we see Bitcoin capital rotating out of, it'll be difficult for Bitcoin ETFs to rotate capital out of those into other altcoins. Now, some are warning of a 2026 bear cycle. How do you think investors should look at timing the crypto market? Because timing is so critical here. And I think as we are building up to quite a positive market momentum, everyone is watching the clocks and watching their portfolios. What would you advise from historical cycle peaks?
Yeah, I personally have learned a lot for the past few months to look away from the time calendar way of thinking to rather some technical indicator way of thinking. What I mean by that is, yes, I agree. ETFs has changed. They have changed these market dynamics. And what has changed are ETFs front-loaded the demand and extended the distribution for sure. That can in turn really flatten, any of the extreme volatilities and stretch the cycles for us. But at the same time, they wouldn't repel macro. What I mean by that is rates, liquidity, fiscal policies, USD, for example, all of those would have a bigger impact on the general performance of the crypto and Ethereum and BTC included. So how do I think about timing the market now? And what I have learned for the past few months is that we should use tripwires, not just date targets. For example, monitor ETF net flows, monitor stablecoin net issuance, monitor BTC dominance, open interest funding via spot, any of the on-chain profit/losses, and centralized exchange vs DEX spot volumes. Those are very useful indicators for us to look at, rather than just looking at the chart historically 4 years. So we're still gonna just counting the dates. I think this way is a more dynamic monitor to reflect the market. And speak of that, CoinMarketCap, we actually built a market cycle page. So if you go on to CMC's homepage now, you would be able to say under the third column, then you'll see like market cycle indicators. And on there, you'll find some really useful measurements to use. But apart from that, I would say how I position my own portfolio has changed. So I would do it in layers now. I would always have my core BTC/ETH layer that I sort of a strategic allocation as they put there. And then I would have second layer of satellite. What I mean by that is those are chasing the trending narratives. So those are satellites for themes like RWA, restaking, DPaying, etc. And I will then on top of that have that yield bucket. So the yields coming from for example, some meme coins, some new launches, those type of things. By having a layer strategy and having different purposes for those layers would help you understand the market a bit more and a bit better rather than just timing and go all in for one thing.
That's a really good tip. And I think as well, exit strategies in crypto does often get overlooked. So I would say to anyone, if this is your first, second, even third crypto market cycle, is absolutely taking advantage of the resources like available at CoinMarketCap when it comes to analyzing your DCAing, what the trends are, where we are in the market cycle, and then DCAing out as well. And always do your own research. That's a great little tip. I will absolutely check that out. So now you've mentioned some of the kind of the different macro institutional plays that we can use to really absorb and analyze where we are in the market cycle. Institutional appetite is always just going to be a big one because looking at where the big money flows, particularly coming from the United States, and how that could impact the rest of the global market, and then also in return impacting the crypto market. So I've seen huge headlines of funds and corporations buying into ETH and Bitcoin. We've also seen a lot of kind of corporate treasuries that are adopting crypto narratives, and there's a lot of alignment with crypto projects, which is fantastic to see such an alliance across like the NASDAQ and much more. How strong is the institutional appetite this market cycle?
Yep. I would say we have made some histories. What I mean by that is for a crypto community, we should feel really proud. IBIT, the BlackRock Bitcoin ETF, that is among the top 3 quickest growth ETFs in the entire history of all BlackRock products. So the sheer amount of inflows that they were able to track, even during market conditions like uncertain ones. For example, last week, we still saw such strong inflows, 3.7 billion inflows into digital asset products just the most recent week. So I would say the demand from institutional side is very strong. And that demand is not just on BTC itself, but also, last week, for example, we saw 77% of that inflows went into Ethereum. So in general, as a combination, institutional investors, they definitely don't have enough opportunities in their traditional market field to compete with performances like crypto delivers. And that in itself is very attractive to them. Plus, for their point of view, something like blockchain, something like AI are good diversifiers. So some of the investment managers would use it that way. Apart from being an active investor, another thing we're saying is treasury plays. So you are saying, using crypto as a treasury into their portfolios, into their corporate buildings, and also sovereign wealth as well.
Yeah, it's amazing. Institutions aren't just like testing the water at the moment. I think along with ETF inflows, RWAs, and treasuries, as you mentioned, it's such an exciting time, and I think it will really be a huge testament to the next few months in crypto. So as you mentioned, corporate and DAO treasuries, how are they really managing crypto today? Because I think this is interesting to see how are they diversifying? Are they staking their crypto? What kind of sub-trends are we seeing within this user demographic?
It's a very good question because there are different styles.
Yeah.
Corporate, they oftentimes use BTC as reserves, and that still remains the core strategy. And now what we saw for the past 2 weeks is Ethereum as well as a productive reserve. It's also an emerging trend for them. But most do really pay to the cash or short duration yield. So high profile names really changes in the treasury pivot signals sort of institutional comfort and not just marketing. So if we look at some data stuff here, MicroStrategy, right? Strategy now holds about 3% of all the BTC, 629,376. That was like 5 years of accumulation for MicroStrategy.
Mm-hmm.
And a few other institutions as well have been holding quite significant reserve, and that's a typical corporate BTC as reserve play. Now, coming back to DAOs are slightly different. So total DAO treasury, they now hover something around 20 to 22 billion USD. And the allocation really skewed towards stablecoins, Ether, and staking or restaking type of wrappers, because they also want to gradually diversify into RWAs and for yield purposes. For example, Maker's RWA income or USDS evolution that we saw. Some of the toolings they have provide quite good solutions in there as well. Really help professionalizes the treasury ops. So those are different types of plays that we saw. I would say the DAOs normally do it a lot more sophisticated than corporate, but corporate still remains the main demand.
Okay, fantastic. And that's really interesting there to see the different trends within the two between corporate and treasuries. So finally, we have to look at retail participation because I think it just wouldn't be a market overview without looking at where retail is. We've spoken about institutional plays, we've spoken about different token narratives, but there's a lot of different kind of core components that we can look at to see where retail is in this market cycle. First question is retail here, do you think, this market cycle yet?
So partially, CoinMarketCap, we have like about 900 million page views per month. So we collect a lot of data on sort of user behavior, on community trend, etc. And we have started to see the signals from CMC app stats, from the active users, that suggest returning of retail interest. So that's a very good sign to have and to see. But the spot transaction metrics are mixed from for example, the exchanges and the trading side. US broker data still shows sort of softer retail volumes than 2021. And retail is very present in things like memes, like AI, and some of the like niche areas. Whereas and also on the perp venues as well, right? What we are seeing recently with the success of a few products there. But the mainstream spot flows still remain ETF and institutional led.
Which is interesting. And I was actually working with CoinMarketCap in the bull market of 2021. And I remember at the peak of CoinMarketCap's market cycle and the kind of market top, and that was 2 billion across all of the languages for monthly page hits. And I think at the time, someone had tweeted out that CoinMarketCap was the 57th most viewed website in the world. So 900 million is a huge testament to crypto, but it sounds like there's still room to run on this, which is exciting.
If you tell me 2 billion is a bull market case, I can't even imagine how busy the product team would be. We would be all very busy but happy.
But it is interesting because we are seeing kind of social and search trends are showing retail that is returning, but also in a more kind of educated and structured way to what we saw in 2021. And some of the research that we have from the Binance research team is showing that there is a little bit more of a kind of cautious approach rather than YOLOing into meme coins or different sub-narratives. You are seeing starting with Bitcoin or starting with stablecoin yield as well, which is quite interesting to see how the appetite and the consumerism with crypto has changed.
Yeah, definitely I agree. And now the tools that we have at our disposal, but also the data available, it's so much more compared with previous market cycles. So I think people are a lot more equipped to make more sophisticated trade strategies than previously. So the game is more fun.
The game is more fun. Well, Alice, thank you so much for coming by. And I think, as you've mentioned, that there is more data available. So I would love to hear from everyone watching. If there's any data interpretations that you would love to hear from CoinMarketCap, drop them in the comments. And then Alice will have to get you to come back and dive into more CMC data. But thank you so much for the time today.
Thank you for having me.
It was always a pleasure. And guys, thank you so much for watching. If you've not yet, do make sure to subscribe to the channel. 97% of you are not yet subscribed. So we'd love to see you subscribe, hit the bell notification so you don't miss the next one.